I have 5 messages for you today. Number 1, let's focus on the economy. So many commentators are concerned about the risk of recession. We don't see it at Coutts. This week we had 2 very important data releases. One from the United States, industrial production. There's never been a recession without weak industrial production. This month it was strong, very important, up 0.5%. The other important indicator came from the UK, consumption, retail sales. This was very strong indeed, in fact growing at circa 5% year over year. So evidence is on our side at the moment that there's no recession. That's point number 1. Point number 2 would be markets, because markets are different from the economy. We could be right about the economy, but markets could remain weak. However, when you look back in history, the really, really poor markets tend to be associated with recession, whereas these types of markets are associated with risk-off, general deleveraging, and so we see that much more likely scenario. So in terms of markets, that leads on to my third, which is opportunities. Tremendous opportunities right now. Of course, equities are down. Always good to look at equities when they're on sale, but also within fixed income. Credit's been punished very, very hard, so there's tremendous opportunities for our portfolios to find interesting income streams from high-quality corporate bonds, which meet our clients' needs. The fourth point I'd like to make is Coutts open architecture, i.e. funds. So how often do we see the fund managers? I just saw one today on Asian income, for example. And every week, every Tuesday, in fact, we have a meeting on all the funds in a certain sector. So we're keeping a very, very close eye on the fund managers. And the final point that's on everyone's minds, or a lot of people's minds here in the UK, is Brexit. The Coutts view, which we're publishing shortly, and we can show you a link to that shortly, is that it's not that important. One, the economics will come through. And secondly, in any case, we pay a lot of attention to the commercial bookmakers. May sound a bit strange. Why? Well, it's the wisdom of crowds type analogy. And they were much more accurate on the previous votes, whether it be the Scottish election or the UK election. What are they saying today? 70% probability of in. And so what with that, and what with where sterling is trading weak already, it's largely discounted in the price. UK equities are holding up relatively well in a difficult market, admittedly. So when we put the overall Brexit argument together, it's not so much of an issue for us.